Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Time to look at a couple of momentum stock picks now with Mike Vodka, our momentum stock analyst at Zacks.com. We've got a couple of interesting ones this time, I have to admit. Standard Motor Products, the first one on his list, SMP is the ticker symbol. They manufacture and sell replacement parts for motor vehicles.
Yeah, that's right. So they're operating kind of in the autos domain, not selling directly to manufacturers, but it kind of plays into the dynamic of what we're seeing in the auto industry where a lot of consumers are choosing to just replace older parts or upgrade existing units as opposed to buying new. That kind of changed with the Cash for Clunkers program, but that's a trend that we've seen showing up in a lot of companies here. It's an international company. They operate in the United States, Europe, and Latin America, so they have good geographic diversity. They've been around since 1919.
Wow, so 1919? Really?
It's almost 100 years old. It's an old company.
Yeah, really?
Yeah, but they're not particularly huge. It's 232 million market cap, so they technically would fall under a micro cap or a small cap. And again,
provide aftermarket parts for bicycles back then? Or
maybe that's what it was. Yeah,
horse and carriage.
Right. Good point. I didn't think about that.
Yeah.
But the company had a nice quarter on August 5th. Of course, they beat on earnings. They had 27 cents earnings per share against the expectation of 14, so that was a nice beat. On the revenue side, they were down about 8% from last year, which, you know, in the context of what's been happening, that's not terrible. That's pretty solid. What they did mention is that, like many companies, they were able to score some nice cost savings. Through the first 6 months of the year, their sales and general administration expenses were down $13 million from last year. That's a nice gain.
Yep.
And they were also able to open up their margins a bit. Their gross margin expanded to 25.5% from 21%, so they're taking more dollars out of the operation.
Sure.
And also, since then, the estimates have spiked a little bit. We're up to 39 cents per share. Based upon that earnings estimate, this isn't exactly an inexpensive stock. Shares are fairly expensive. They're trading at 31 times current year earnings. But, you know, they do have the nice next year projection, and, you know, shares have really responded nicely. This has been like a big time rally. Shares took off in early March. They bottomed out at about 125 per share, and they recently topped off at 13. So obviously that's a very big short-term gain.
So is the stock price near its historical high?
Well, it actually has surpassed its 52-week high, but on historical level, no, it's traded higher. It's a little pricey from a valuation perspective, but they do have some nice upward momentum.
All right. And a company that more people could identify with, at least knowing the name of anyway, DreamWorks Animation. SKG is the full name of the company. DWA is the ticker symbol. And for those who don't know, they produce computer-generated animation in movies.
Exactly, yeah. It's kind of a cool company, and I'm sure a lot of our listeners are familiar with it. They're responsible. I mean, Steven Spielberg is one of the owners of this, Jeffrey Katzenberg, and David Geffen would be the other partner. And, you know, they've done movies like Trek would be one example, or Shrek.
As he trekked through the forest.
And they've been around since actually 1985, so they have a decent history, market cap of $2.7 billion, so, you know, a decent-sized company. Again, getting back to their earnings here, second quarter at the end of July, they had a nice beat. Earnings came in at 30 cents per share. Analysts were looking for 17 cents, so that's pretty solid. A couple of points that they made that I wanted to point out to our viewers here is that what they said is that moving forward, they're going to be producing 5 movies every 2 years. Previous to this, they were producing 4. But what they said is that they're not going to be hiring any additional staff. They're going to do it with what they have right now. So basically, they're trying to make their operation a little bit leaner and go for the cost savings to drive their earnings forward.
Yep.
Beyond that, though, they also noted that, you know, a company like this spends a lot of money on advertising and marketing. They said that they've saved a lot of money on advertising expenses because the networks are kind of hurting for advertising dollars right now, so the rates have gone down a little bit. Moving forward then, right now shares are trading at 19 times earnings. They're right in line with the market, but what they do have going for them is the very bullish next year projection, which is at 38%, so that's very solid right there. And then moving on to the chart, shares took off in early March, just like many stocks we talk about here. They bottomed out at about $17, and they recently topped off at 32, so that's a nice gain.
All right. Do you own either of these two?
No, I don't.
Check out more momentum stock picks on Zacks.com's homepage that Michael has written about recently in the upper right-hand corner. Next to the momentum listing, you'll find a headline. Click on that headline. It'll take you to his most current story and an archive of some others. With Michael Vodka, I'm Terry Ruffalo.